Hey folks, welcome back. If you owe the Oklahoma Tax Commission and you can't pay the full amount right now, a payment plan could be the solution that keeps you out of further trouble. Let's talk about how these work and what to expect. The OTC does allow taxpayers to enter into payment agreement. The concept is similar to what you'd see with the IRS. You agree to pay a set amount each month until the balance is satisfied. And in exchange, the OTC holds off on more aggressive collection activities like garnishments and levies. So how do you set up? Well, you or your representative contacts the OTC's collection division and proposes a monthly payment amount and term. The OTC reviews your financial situation to determine whether the proposed amount is reasonable. They may ask for things like financial documentation, including income, expenses, bank statements, and information about your asset. What factors do they consider? Well, they want to know that the payment plan will fully satisfy the debt within a reasonable time frame. They also want to make sure that the monthly payment amount reflects your actual ability to pay. If you propose $100 a month, but your financial records show you have enough disposable income to pay like $500, they're going to push back. Be realistic in your proposal, because an agreement you can't sustain is worse than no agreement at all. A few important things to remember. Interest keeps running. Even while you're on a payment plan, interest continues to accrue on the unpaid balance. This catches a lot of people off guard. So the sooner you pay it off, the less total interest you'll pay. If you have the ability to make larger payments in certain months, definitely do it. You must stay current on all new tax obligations as well. If you enter a payment plan for back taxes but then fail to file or pay your current taxes on time, the OTC can default your agreement. Once that happens, you're basically back to square one and the full range of collection tools is back on the table. A payment plan only works if you're in compliance going forward. A down payment may also be required. Depending on the amount owed, the OTC may want a lump sum payment up front before they'll agree to monthly installments. This shows good faith and reduces the overall balance that needs to be paid over time. Remember, defaulting is worse than not having a plan. So if you enter into an agreement and then stop making payments, the OTC will default the agreement and immediately resume collection, often with less willingness to negotiate a second time around. So only agree to terms you can actually meet. And one more thing, getting a payment plan in place can sometimes stop or prevent aggressive actions like wage garnishments or bank levies. So if you're already facing those, a payment agreement may be part of the solution for getting them released. If you need help setting up a payment plan with the OTC, make sure that any plan you talk about fits your specific circumstance. Talk to your tax advisor and make sure that you get into a plan that you can afford. That's the most important takeaway from today's video. Thanks for watching.